Greetings, Cretan learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, I'm going to be talking statement of financial position, but my focus is going to be on equity and non-current liabilities. I have a practice question for you, and it reads, an extract from pre-adjustment trial balance of deals traders on the 31st of December. And I have additional information. The owner increases capital, but this has not been recorded. We have net profit, which has also not been recorded. And we have goods to the value of 6.5 taken for personal use. Let us then see how we can record this in note number 7. We begin with balance at the beginning. So here is my balance at the beginning. My balance at the beginning is 525,000. Balance at the beginning is 525, which is this one. This is because we have several transactions that have not yet been recorded. I know that I must come and add my net profit for the year. Net profit for the year. I'll come and add the net profit for the year. And the net profit for the year is 172,000. So I'll come here and say plus 172,000. Then, after I've added my net profit for the year, I also need to add the additional capital that has been contributed by the owner. So I'll come here, then I'll say plus additional capital. Plus additional capital. Plus additional capital. And my additional capital is 80,500. All right? So I'll come here, then I'll say plus 80,500. That is the additional capital. Then number 3 then reads, goods to the value of 6.5 were taken for personal use. So I'll then come here and I'll say minus drawings. Drawings must be subtracted. Drawings must be subtracted. They say goods to the value of 6,500 were taken by the owner for personal use. So this was not recorded as well. So I have my drawings of 32,000 here. I'll come here. I have my 32,000. And then there are goods that have been taken for personal use, 6,500. So I'll come and say plus 6,500. I want to know how much is my total drawings. So say 32.5 plus 6.5. That gives you 38,500. Very important that whenever you have goods taken for personal use, you remember that it increases your drawings. So now I have the balance at the beginning, 525 plus 172 plus 80,500 minus 38.5. It will give me now my balance at the end. And my balance at the end is going to be, my balance at the end is going to be 739,000. 739,000. There it is when it is neatly written. It is very important to remember that once you have this amount, the 739,000, you then bring it now to your statement of financial position under owner's equity, capital, note number 7. We have just done note number 7. And the total is 739,000. There is my 739. That makes my equity. All right. My next information that follows reads, interest on the loan from Spark Bank has not been entered yet. Interest is capitalized. The loan statement from Spark Bank reflected the following. Then I have the information given. So what I'm going to do to make it easy for me, I'll open a loan account. I understand that my loan is a liability. So I'll come to the credit side and I'll say plus. And on the debit side, I'll say minus. Loan is a liability. So my balance at the beginning comes to the credit side. Balance brought down, which is 350,000. There it is. Balance brought down. Then I will bring my interest, because they say interest is capitalized. So interest capitalized means we credit our interest, 12,000. Interest capitalized, 12,000. Then whatever repayments have been made, I'll bring them to the debit side now. That is repayments, 18,000. So I'll come here. There are my repayments, 18,000. I now need to find the balance carry down. But for me to do that, I close this account. So I'll say 350 plus 12. That gives me 362,000. So I'll come here, I have 362,000. 362 minus 18,000. My balance carry down therefore becomes 344,000, which therefore becomes my balance brought down here. My balance brought down 344,000. Once I have that 344,000, I then consider that I've been told here the repayments of the capital portion of the loan will remain constant in the next financial year. That is to say, when I made payments of 18,000, I was making payments of two things. Number one was interest, which is what you find here, 12,000. But the next thing that I was also making repayments for is the loan itself, the capital portion of the loan. So if I say 18 minus 12, that is 6. So here on the loan itself, I was paying 6,000. That is why if you say 350 minus 6,000, you get 344,000 there. That means on the loan itself, I was only paying 6,000. So they're telling us that it will remain the same in the next financial year, the same 6,000. All right? So once I am told that, I then need to remember that once I have a loan that is going to be paid within the next 12 months, it stops from being a non-current liability and becomes a current liability. So I would then come here and I'll say my loan at the end is 344,000. However, within the next 12 months, I'm going to pay the capital portion of the loan, which is the same again. Remember, for the 18,000, we said we had 12 plus 6. That is how we got the 18. So I'll say 344 minus the same amount that we paid this year is the same amount that we'll pay next year. So it will be 344 minus 6,000. That will give us 338. 338. And then that 6,000, it becomes short-term loan, which I then bring down here, 6,000. Short-term loan, current portion of loan. All right. It is very important, dear learners, that once you have prepared your loan account, you have to understand the instructions that you are given in the information. If the loan repayments remain constant, whatever you would have paid in this year, 350 minus 6 gives you 344. That means this becomes our loan repayment. That loan repayment, once we are told it is remaining constant and we are paying it again in the next year, we come and we subtract it from the non-current liabilities because we are going to pay it within the next 12 months and we bring it to our current liabilities. And we say short-term loan, 6,000. All right? That is how we should do it. Dear learners, we'll go for an ad break and I'm going to see you shortly.